Good morning, good morning, good morning. Welcome to the Morning Blood. This is the very, very candid podcast by myself, Ryan, and of course, Michael, where we look to put a bit of value into your day, put a smile on your face, cut through the bullshit that is increasingly around on markets, specifically on social media and whatnot. Before we do, just a reminder that there is no trading advice or etc. etc. Do your own due diligence. We do not apologise for using foul language. That's the reason the show is marked as explicit if you're listening to this on a podcast player. Yada, yada, yada. Michael, how are you?
Well, very good morning to you, mate. Good morning, everyone. I'm very pleased to report that I was not woken up at 1 o'clock this morning. There was no buzzing in my bedroom overnight before you go down that route. But yeah, you do sound, well, a bit like death warmed up this morning.
Yeah.
The old man flu seems to have got you down.
It's not confirmed as man flu yet, but I am fearing the worst. Yeah. Pray for Ryan, basically.
Well, I would lay a claim to your estate, but it's probably not worth it, is it? So,
it's more aggro than it's worth. I'll be very honest with you. You'll be tied up in legals for many years. Anyway,
just get someone to hide the hard drive, and you'll be all right.
I've got one of those medical bracelets that says to stick it in the microwave if they find me dead. Anyway, moving swiftly on about my hard drive. Let's get cracking because obviously it is Monday, so it means we are going to go over what's happened on Friday, Saturday and Sunday, and we will be throwing in what's to come during the week. But before we do, an update from our good friend Clive Lambert over at Futures Techs for market levels and some where markets are trading and levels to watch on the technical side of things. S&P closed below its 200-day moving average on Friday for the first time since last May. So if you did want to call anything a bear market, this would be my guide rather than a 20% down, but there you go. But a rally so far in overnight trade has seen this retaken.
I was just going to say, sorry, the only slightly ironic thing is we've actually crossed below the 200-day moving average before we've fallen 20% from that.
Yeah, but you know what? But I think this still makes it right. You know, like we've said many times, when you are thinking of bull and bear markets, although I do hate the static definition of these, I much prefer 200-day moving averages.
So do I. The thing to bear in mind, though, and I don't want to sort of steal Clive's thunder here, but the 200-day moving average has actually been rising for the last 6 months or so. Yeah. It's not as if that's rolling over as well. So.
No, exactly that. You know, like
it's more price has come down to meet. It's more the MA has come up to meet the price.
Yeah, you get that if like markets go choppy sideways for a while, you're going to get that, and it's definitely not a bull market. We could say it like that.
No, but I'm sure the Elliott Wave people called this 8 months.
Oh, absolutely. It's the same story for Nasdaq as well. For anyone wondering, obviously I've just given the S&P. This side of the pond in Germany, DAX has been below its 200-day moving average for a while, and it's currently sitting south of a Fibonacci level at 23,729. That's weighing on the market. FTSE futures fell at 10,359 on Friday, something for the bears to grab hold of. Bund futures, German bonds futures that printed 125.68 on Friday, the lowest print since last May when 124.67 was the low, and we bounced from there for what it's worth. T-notes, they're eyeing the January low and the bounce at 111.07.5. Friday was a doji, which has been known by now as all wick, no body, a bit like myself, with a low at 111.11. All the ones, 11111. The dollar gains narrative continues to gain traction. Classic flight to safety stuff, perhaps. Eurodollar.
The only narrative he knows.
That's the only narrative he knows. That's Clive when we're referring to that. Eurodollar, obviously the currency, not the stirs, is now eyeing support at 1.1391, and also we've got support at 1.1367. Dollar yen, that exceeded its January high on Friday with a 159.75 print. Above that, 161.85 is the high and failure from July 2024. Bitcoin bucking this trend and is bid again today, retesting the well-watched by Clive and by us anyway, 74,500 level. Gold, the yellow metal, continues to trade damply. That's a new one on me, as does silver. All the metals, in fact, with the possible exception of aluminium, which is just off its recent highs. In oil space, in the crude markets, obviously technical analysis is a brave one to be looking at in these markets. But there you go. Just being polite there to Clive. Oil benchmarks gapped up this morning, but have already tracked back. The bulls are winning despite this, and an orderly retest of 119.50 is now looking possible for Brent. Obviously, this is all dependent on headlines and what's going on in the Middle East. Henry Hub, the US gas benchmark, can't see off Fibonacci resistance at 3.275, so we're still with the bears there. This side of the pond, TTF, so Dutch gas, which is basically European benchmark gas, posted a doji on Friday and has a quiet start to proceedings today. So taking a welcome breather for now, emphasis on the for now. In the EU carbon markets, made another new low for the move on Friday with 67.60 print early doors, with a recovery of some sort seen here. Marabou's resistance for the EU carbon markets is 69.95. Wasn't worried though, so we stick with the bears. For anyone wondering why we do keep bringing up the EU carbon markets, is because it's basically what Clive's very good at. And a lot of his very big clients are carbon traders, energy traders in Europe. So that's why that's thrown in there. And if that is your bag, definitely get in contact with Clive. On the agricultural front in the US, corn and wheat both posted green candles on Friday, playing catch up with the soybeans. 594.5 is supporting corn, while 613.6 protects the 641.6 to the upside. And that's it from Clive. It from me for now. Thank you very much, Clive.
Good stuff. Thank you, Ryan. Thank you, Clive. I mean, we may as well start in the Middle East because that is really the only story that matters. I would just flag, actually, incidentally, although we did see, as Clive kind of alluded to there, a bit of a sort of risk-averse end to last week as participants trimmed down their exposure and basically went into the weekend flat. We have had a marginally more positive start to this week. Futures on both sides of the pond are, well, they were 10 minutes ago when I left the desk, nicely in the green. Treasury is a little bit firmer. Crude up by a couple of bucks a piece if you look at WTI and Brent. I know that is a significant move before anyone starts on me, but in the grand scheme of things of what we've been seeing lately, it's a much more modest move than we've become used to. Yeah, exactly. It's also a modest move in the context of implied vols, which are still implying, $6, $7, $8 moves on a daily basis. So I'm not going to stand here and say, it's over, we've got the all clear, all the rest of it. The Hormuz is still essentially impassable. But the market seems somewhat calmer this morning, certainly calmer than it has done on the last couple of Mondays when we've been stood here giving a sort of review of what's happened over the weekend. But anyway, let's start in the Middle East.
Just quickly on that, it is an odd one because I wouldn't say it's a lack of news that's made it slightly more slightly less volatile. I think it's almost like we've had very much balanced news over the weekend because we've had, at the moment, oil supplies are coming out, trying to move, it's kind of bypassing the Strait of Hormuz and coming out of Fallujah and also via the Sumed pipeline down to the Red Sea, which is that's the positive news that oil transfers are happening that way. The bad news is that Iran seems to be targeting now Fallujah, and there is potential for the Yemenis and the Houthis to wake up and start attacking the Red Sea and also that pipeline. But then countering that, we've also seen some big escalation this week where Trump is actively exploring the US seizure of Karg Island. We've seen it being softened up in terms of the defensive positions on the island, but must be stressed that no oil facilities have been hit on the island. But then also he's also claiming that NATO have been told, they face a, quote, very bad future if they don't step up and help with a framework to, I'm not saying attack Iran, but at least help with the Strait of Hormuz. So there's a lot of headlines and a lot of serious headlines, but they all net, they all seem to balance themselves out, which is why I think the market is quite subdued this morning. It's like, I would say it's coiled rather than subdued, really, if that makes sense.
Yeah, well, thanks for that, Ryan, because that's literally everything I was about to say. So you have very much stolen my thunder there, but I do make you right. I think it's a combination of the headlines that we've had over the weekend kind of all net each other off to a certain degree.
Much simpler way of trying to say what I was waffling on about.
See, if only you just let me go down that path.
Sorry.
And the other point I would make is that nothing. There's not much cause for optimism. I will grant you that, but also I wouldn't say we're in a materially worse place in terms of the broader landscape now compared to where we were when markets closed on Friday. So from the point of view of, you think about markets as a discounting mechanism, new information comes in, has to be incorporated into the price, whether that's a positive or a negative catalyst for the asset in question, that there just really isn't that much by way of negative or material negative catalysts that need to be factored in as we get up and running for the new trading week. And again, that I'm saying that at 8:30 Monday morning London time, that could change if you're going to listen to this later on.
I was about to apologise for people listening to this in an hour's time for the massive jinx that we've just done.
Yeah, when shit has properly hit the fan. But yeah, no, I think you're right. I mean, obviously, one of the main headlines over the weekend were these US attacks on Karg Island. These happened sort of overnight Friday into Saturday morning. For those unfamiliar, Karg is where about 90 to 95% of Iranian crude exports come from. The US were very deliberate in those strikes not to target any energy infrastructure of multiple sources, including Iranian media and the very, very good tanker trackers who you must be on top of if you're trying to follow this. They all say that exports from Karg are still proceeding normally, which has probably lessened the impact of that. I think, when you initially see a headline, Karg Island struck with missiles, you think, oh shit, here we go.
And to be fair, even some of the what we would call experts were initially fearing the worst without confirmation. And again, like I know Sammy and Lisa at Tanker Trackers, I've been friends with Sammy for very many years now, and it's been great, like seeing what started off as just Sam just kind of tracking them for fun to turn into a really, really kind of well-respected company. So I have mad respect for those guys. But yeah, and even they issued a kind of a correction / kind of apology and say, look, it wasn't as bad as what we first feared. Also, people wondering, I've seen people wondering why Iran is still being allowed to export oil. Now, this one simple reason for this, and it's one word, it's called China. China, the guys buying it. Trump does want to keep on side with China. There are talks and a visit coming up as well, I think, at some point this year.
Yes, I was going to get onto that in a second.
Sorry, this is what we get. If anyone was wondering if we do...
We don't fucking plan this at all. It's kind of showing. But no, the reason why I was going to come on to that is because it brings me on to the second point, which is around all of this conversation we've had over the weekend when it comes to the Strait of Hormuz, because the US are increasingly trying to put together a coalition of warships, effectively, to reopen the strait and provide escorts to tankers to get them through. Now, it's worth bearing in mind that some tankers are getting through. Quite obviously, Iran are not shooting their own tankers as they go through the strait and export their own crude. There were also reports of a couple of Indian tankers. One was crude, one was LNG, I believe, that managed to get through the strait towards the back end of last week. Also, a couple of rather bold or rather stupid Greek ship owners have gone a bit rogue, just turned off their AIS and gone for it. They seem to have made it work.
Well, the thing is this, and what did I say last week? Was it Thursday or Friday? That look to the Greek shipping magnates, because this is where I literally spelt this out, because they rub their hands together in times like this. Fun fact, EasyJet.
Yes.
Right? So the guy that owned, the founder of EasyJet, Stelios, whatever his name is, his dad made all his...
Glad you didn't try the surname.
No, I'm not. Stelios. Sorry, it's my cold. I can't do this. But no, his dad made all his billions via running the gauntlet during those times. So
that does not surprise me at all. However, unless you are a Greek shipping owner, the majority are still deciding to wait it out and not run the gauntlet. So as I say, the US are trying to put together this coalition to basically try and reopen the strait. Safe to say it hasn't gone down especially well thus far. Trump was talking about this on Truth Social over the weekend. There have been various reports in the media, CNN, Axios, basically everyone running with a similar version of this story. Thus far, it's received quite a lot of pushback. And I think the reason why...
We love a good pushback story.
The reason why it's getting so much pushback is because basically you've got all of these coalition nations going, we don't want to send our warships into a very, very hot war zone and make them a target. French President Macron said basically that towards the back end of last week, and I think his view very much mirrors that of most other Western nations at this point. Trump has also apparently asked the Japanese to get involved. good luck with that one, given their sort of, well, the pacifism is in their constitution, I believe. Also wanting the Chinese to get involved. The FT were reporting overnight that Trump is threatening to delay this summit with Xi that's booked in for the end of the month if China don't provide warships to help tankers get through the strait. That's just noise in my mind. That's just classic escalate to de-escalate negotiating leverage.
It's worth pointing out that Japan and Australia have already said no to Trump's request.
Yeah, and I think essentially everyone is either going to say an outright no or not now, but we will be happy to contribute as and when conditions allow. I think that's very much the way that that's going to work. How Trump reacts to that, I don't know. I mean, we were talking about on the desk earlier on. Essentially, the message to partners around the world is we've started a war. We now need your help to get us out of a sticky situation that you didn't want to be in the first place. Well, and you didn't put yourselves in. So
just on that as well, because again, that is definitely the vibe over the weekend where literally saying, well, can you come and help us or not? If it wasn't for Trump being a bit of a maniac, they would tell him to fuck off. But because you don't know, you can't exactly say that to Trump. But also what I did see was, and apologies, I don't know if the quote is from like yesterday or Saturday, because I only read it this morning. But basically, he's also turned around to some reporter and said, do you know what? I actually don't know what we're doing over there because we don't need the Strait of Hormuz ourselves.
Yes.
So you can't just say that up. You can't just make that up as you've already been spending 2 weeks bombing it.
No, you can't. And I think there is, again, I don't know how seriously to take those comments, but it does kind of lean into what we were discussing last week around the what's it called? The Jones Act and how that's been suspended. You know, is there a scenario where Trump effectively goes, right, war's over, pull the ladder up, I'm all right, Jack, we've got all the crude we need, got the Jones Act sorted so I can send it around the States, could put in an export ban if he really wanted to go, hard on this one. We're fine, we're producing all the crude we need, we've got the gasoline, we've got the jet fuel we need. But effectively, fuck the rest of you. You can sort that out, even though I've created the problem. I'm not saying that's my base case, but he's Trump. You wouldn't rule it out, would you?
Yeah, exactly. Just quickly, I know because I know we do want to go on to the week ahead because it is a busy week with central banks and whatnot. But just that full quote for anyone wondering, because I do think it opens the door for quite a lot of things. So let's keep an eye on this story as it develops. But his quote was, and this was on board Air Force One, and I think it was yesterday by the looks of it. He said, quote, really, I'm demanding that these countries come in and protect their own territory because it is their territory. They should help us. You could make the case that maybe we shouldn't be there at all because we don't need it. We have a lot of oil, unquote. So, yeah, okay, well, maybe think about that before you got involved in the first place, mate. But, let's leave it there. Well, like I said, me and Michael, we know we are always talking about the Middle East right now, and we do apologise because there is more things in the world. But at the end of the day, it is what's moving markets.
It is, and fundamentally, it's still a market, maybe to a slightly lesser degree this morning than we've seen in recent sessions, but it is still a market that is squarely focused on what's going on in the Middle East, and more importantly, it's a market where pretty much every asset you look at is taking its lead from the direction that crude prices are trading in, and until I think we see either a de-escalation or progress being made in terms of unlocking transit through Hormuz, I think that's going to basically remain the case. Before we do the week ahead, I did just want to mention two things very briefly. The first is that there are US-China trade talks going on right now, actually, in Paris. Apparently, the talks they held yesterday were, quote, candid and constructive, and they have agreed to, quote, enhance stability in their trading relationship. These talks are going to resume again later on today. Of course, it's a bit of a precursor to that Trump-Xi meeting at the end of the month. The other thing, just to bear in mind very quickly, is on this ongoing legal drama surrounding the Fed. You'll remember, of course, that the DOJ subpoenaed Fed Chair Powell and the Fed board. I think it was earlier this year, actually, wasn't it? It all blurs into one at this point. This was basically around these building renovations that the Fed have been doing. It was a very, very thinly veiled ploy to exert further pressure on the Fed to basically lower rates and do what Trump wants. A judge in the United States has actually blocked both of those subpoenas against Fed Chair Powell and the Fed board. This happened late on Friday. The judge said there is essentially zero evidence and that the subpoenas were issued for an improper purpose. I think that was pretty obvious to everyone. However, the problem here is rather than just kind of standing there and going, oh, well, we lost that one, we're going to get our new guy in at the Fed anyway in 3 months' time, let's just leave that. What's actually happened is that the Washington, D.C. attorney, Jeanine Pirro, has decided that she is going to appeal this case. She also went on a very rambling, it looked like she was drunk, to be honest, press conference on Friday evening, basically ranting away about how this is an incorrect decision. The problem with this, and the reason why it's important, of course, is because basically all the Democrats in the Senate, plus Republican Senator Tom Tillis, have said on numerous occasions that they will not proceed with the nomination of Kevin Warsh as Fed chair unless and until these legal issues around the Fed have been cleared up and come to an end. So this is effectively complicating the process of getting Kevin Warsh confirmed in that job for the 15th of May when Jay Powell is due to depart. So again, focus is very much on the Middle East, but don't forget that these other developments are going on in the background and they are still just as important, even if they're not market moving at this moment in time.
Yeah, no, exactly that. Exactly that. But the week ahead, what have we got? We've got FOMC, we've got Bank of England.
Oh, jeez, we got everything this week.
Quadruple witching.
Yeah. Well, that's Friday. So, let's take this day by day. We do have 7 G10 policy decisions this week, which would be quite a lot to get through in any week, let alone one where we're focused so heavily on the uncertain environment in the Middle East. It is probably reassuring to most to know that there isn't a lot going on today. So we are being sort of eased into the week with just the latest Canadian inflation numbers and industrial production from the United States. It's safe to say neither of those will be especially market moving. The first policy decision of the week comes overnight, though, and that is from the Reserve Bank of Australia. The RBA are set to deliver a 25 basis point rate hike, increasing the cash rate to 4.1%. Money markets price that at about a 70% chance, and basically everyone on the sell side has flipped to expecting a hike in the last week or so. Note that this is not only on the back of what we see going on in terms of energy prices. Aussie inflation has been running hot for the last 6 months or so. The labour market is also relatively tight. The RBA are in a very, very different position to most of their peers in terms of G10 central banks. So I don't think there's much that we can sort of read across from what the RBA do to what anyone else might do this week. Speaking of those other central banks, into Wednesday, we hear from the Bank of Canada. We also hear from the FOMC. Neither of those expected to change policy. The Fed set to hold the Fed funds rate steady between 3.5% and 3.75%. Do bear in mind there may be one or two dissents at that FOMC meeting. Obviously, Governor Myron will almost certainly vote in a more dovish direction. Potentially, Christopher Waller, one of the other governors, also dissenting dovishly in light of the downside labour market risks that we see and a view that the energy-induced inflationary pressures will prove temporary in nature. The Bank of Canada, meanwhile, they've got a bit of an issue on their hands as well. Although they're set to hold rates steady at 2.25%, they had an utterly dismal labour market report on Friday, with the Canadian economy losing well over 100,000 full-time jobs and unemployment rising to 6.7%. So I would not want to be Tiff Macklem making that call. Into Thursday, and that's the big one, 5 G10 decisions on Thursday. The Bank of Japan kicking things off. They will hold rates steady at 0.75%, but they will likely indicate that they will continue to tighten policy if their economic outlook is realised. Sources' stories indicate that the next BOJ hike could come as soon as the following meeting in April. Into the European session, the Swiss National Bank, they're likely to hold rates steady at 0%. Focus will fall firstly on if they have anything to say about the value of the Swissy. They did note a couple of weeks ago an increased readiness to intervene in the market in light of the international backdrop. The other thing to bear in mind, of course, is whether they say anything about potentially taking rates into negative territory in an attempt to further lean against appreciation in the currency. Also Thursday, the Riksbank in Sweden, they're set to hold rates steady at 1.75%, while the Bank of England are also set to stand pat at 3.75%, likely to be a 7-2 vote among policymakers policymakers on the MPC, with just Dingra and Taylor dissenting in favour of a 25 basis point cut. The bank's guidance will be in focus. Do they see this as a one-off shock that they can look through and continue to deliver rate cuts as the year progresses in light of the weak UK labour market and anemic economic growth? Or do they see this as flaring up and bringing back a resurgence of potential risks of price pressures proving persistent? That will be key in determining the policy outlook for the BOE. And while we're touching on that, also on Thursday, we do get the latest UK employment stats. They will be out at 7 o'clock on Thursday morning. And then rounding out the bonanza of central bank decisions is the European Central Bank. Lagarde & Co. set to hold the deposit rate steady at 2%. Again, focus will be on what do they want to do next. We heard from Kazimir, we heard from Kazaks, two of the governing council members, a couple of weeks ago, saying that we should be open to the idea of a rate hike if we need to do it. I certainly don't think Lagarde is going to endorse that explicitly at the post-meeting press conference, but we will be looking to see what her guidance is. Are they still in a good place in terms of rates, or are they looking to potentially adjust those on the back of higher energy prices?
On this, I was going to ask you, like, obviously all eyes will be on statements, and both written and verbal statements after the actual announcements, etc. Do we think we're going to see any nods by particularly the ECB and Bank of England, obviously less likely for the FOMC, that hikes are being at least talked about, spoken about?
I don't think we will from the ECB. Well, we won't from the Fed. No. I think that's pretty much a given. I don't think we will from the ECB. I think it will be very much around, acting as appropriate to ensure that inflation is at the 2% target over the medium term. They have a forecast round. Bear in mind, the forecast probably won't account for all of the energy price move, but that's something else that they can lean upon. When it comes to the BOE, this is where we might have an issue, because the BOE issue a policy statement, which is, 4 paragraphs long, that says, all of the consensus view of the MPC. But what the Bank of England also issue is effectively individual paragraphs, about 100 words long, for each member of the MPC. So, for example, Andrew Bailey writes 100 words on how he views the outlook. Hugh Pill, the chief economist, writes 100 words on how he views the outlook. And I think a few of those paragraphs could allude to the potential for policy tightening from the BOE. Because if you look at people like Hugh Pill and Megan Green, they were already effectively shitting themselves about price pressures proving persistent and upside inflation risks before this happened. Hugh Pill actually said, I think a few months ago, that he viewed bank rate as being too low. And that was before we had all of this energy price impact. So again, I don't think it's going to be explicit from the governor himself or from the statement, but I would not be at all surprised if somewhere in the minutes, Hugh Pill and Megan Green mention we should be prepared to raise rates if we deem it necessary, or something along those lines.
I'm very pleased you worded it and explained it quite like that, because that's exactly what I was thinking. I don't think we're going to see anything explicit, but I think via minutes and via whatnot, I think we're going to see that at least it's on the radar, and it should be on the radar. We can't.
And actually, sorry, just on that, the other thing, of course, and we will cover this in much more depth on Thursday in advance of these respective decisions. But just going back to the ECB, it's not only the statement and the press conference. Look at the sources stories as well, because I can guarantee you that if the word rate hike was even mentioned in that governing council discussion, Reuters will have a sources report out about it by about 4 o'clock that afternoon.
Well, I was going to actually say, with every chance that piece will come out during the statement.
Well, we have had that before.
we, if you remember, we've actually had, this is when the ECB were really fractured. We've had sources comments come out between the announcement and Lagarde's statement. That's when you know there's a lot of discontent in the meeting room.
Yeah, absolutely. So, as I say, we will cover that more as the week goes on. I don't think, markets have gone, and I'm halfway through a note on this at the moment, markets have got a bit berserk in terms of pricing, 46 basis points of tightening from the ECB.
It's quite 50 between friends.
Yeah, exactly. Basically, a full rate hike from the BOE is priced. I don't think either of those are particularly likely to happen, but I also don't think that central banks will explicitly rule anything out, because they don't want to box themselves in. I think some are still scarred by the 2022 experience.
Yeah.
The economy's a very, very different place now to how it was in 2022. But I think that will still live sort of long in the memories of these central bankers going, well, last time we had an energy price shock, we said it was going to be temporary, and then it kind of wasn't. Do we want to run the risk we make the same mistake twice? That's going to be factoring into those discussions, I think.
Yeah, exactly that. So plenty to watch this week, not only just in the Middle East, but central banks. Also, we've got the big NVIDIA event this week, the GTC thing. And obviously,
that's today, isn't it?
I believe so. Yeah, today. And obviously, we'll get a lot of commentary of that on, well, the fallout from that, or just kind of analysis and whatnot tomorrow, etc. But
what fun.
Lots and lots to keep an eye on this week, which is why hopefully me and Michael can add a bit of value to your day, put a smile on your face. But Michael, thank you so much for today. Listeners, thank you so much as always. Just a bit of a trading thought for you. Remember, trading is very much like having a fart after a night on the beers. The harder you push, the more likely it is to be shit. But for me, from my